Hi, everybody. I'm Bob Bowman, Editor-in-Chief of Supply Chain Brain, and I want to welcome you to this webinar presentation on why your bookings are being rejected, presented by nigh. One quick reminder, there will be an audience question and answer session at the end of this presentation. Audience members are encouraged to submit their questions at any time during the presentation by clicking on that Q&A icon at the bottom of your screen. Now, shippers don't always know why carriers reject their bookings. It could be due to vessel changes or delays or even the size of the booking. Whatever the reason, because of tight capacity and strong demand, carriers today can be extremely selective about whom they choose to work with. So how can shippers improve their contract performance and booking acceptance? That's the topic of our presentation today. With that, I'd like to introduce our speakers for today. Jenny Bartolf is Director of Logistics at Bark, the creator of BarkBox, the monthly subscription service, providing products, content, and experiences for dogs and their people. One of the company's earliest employees, Jenny spent the last 10 years growing and leading Bark's inbound logistics operation and strategy, including end-to-end international and domestic transportation, carrier management and negotiations, and contract performance. Her tenure has seen the company grow from 15,000 to more than 2.3 million active subscriptions. Matt Marshall is Senior Vice President of Commercial at nigh, whose digital infrastructure unites shippers, carriers, and NVOCCs with a predictable, efficient, and accountable system for global commerce. Prior to joining nigh, Matt spent 4.5 years at Flexport in various commercial roles, including head of key account management for North America and general manager of the Southeast region. Matt also worked in the strategy and operations and supply chain and manufacturing practice of Deloitte Consulting. Welcome, Jenny and Matt. Let's start now with the panel discussion portion of our presentation. I want to kick it off with a question for Jenny. Jenny, how has the market over the last 2.5 years changed contract allocation management needs?
Well, what hasn't changed over the past 2.5 years, right? A few years ago, you'd mentioned to someone you worked in logistics or shipping and they kind of nod and move on, versus I was getting a haircut the other day and the question came up. So I mentioned I work in supply chain shipping and the reaction was immediately like, ooh, that's gotta be rough. So I'm sure we've all had similar anecdotal experiences, but to more directly speak to the question, some key themes and needs that have emerged and remain, despite some of the pieces of the equation shifting, is really the need for an aggressive focus and hands-on management of your volume and contract allocations. So a few years ago, when shippers had a bit more power, where the playing field was a little more even, and even as things are shifting perhaps towards normalcy sometimes this year, but you typically were able to get away with a bit more of a reactionary style. You could toggle and maneuver a bit more easily when you needed to, right? And then cut to 2 years ago when it was a battle over every TEU, right? So many shippers had hundreds of containers waiting at origin, weeks and months. I have very vivid memories of being on the edge of my seat 2 years ago and cheering because I got one more 40 out the next week. And like, that was a victory. And at the same time being like, this is insanity, that like, this is a victory right now. But so what really came to the forefront was this need to be hyper-focused, and as a shipper, set yourself up to be as high performing as possible. Right? Check every box on a list of controllable factors, which we'll talk about a little later, but set yourself up so your bookings have the highest chance of being met. And if they aren't, you have a plan of how to address them.
Well, the silver lining there being that's sort of actions that shippers probably should have been taking all along, but this certainly woke them up to the necessity for that. Matt, what changes have you seen from shippers pre-pandemic to today?
Yeah, so funny enough, Jenny, I got a text from a really good friend of mine today who has nothing to do with industry, who sent me a picture of spot rates decline 4.6% week over week. And I kind of had to laugh similarly. I'm like, how do you even know about this? And so the world has certainly changed a lot in the last 2.5 years, and supply chain management and logistics in particular has been put really kind of on the front page, which is exciting for all of us in the industry. When I look at what's changed from a contract management perspective, I kind of boil it down to a couple of simple things. Prior to 2019, most parts of the year you had excess capacity. and the rate differential between fixed and spot, or even your fixed rates, was quite low. So if your contract didn't perform, you couldn't get space. You either had another carrier that you could get space with for maybe a slightly more expensive price, or you could go to the spot market depending upon the time of the year. And so there was capacity available to you and not a lot of rate differential. Fast forward 2.5 years, that's changed significantly. I think I heard a stat the other day that we still have 10% of global capacity soaked up in port congestion. And so you've got this supply demand imbalance, regardless of rates falling right now. You've got this supply and demand imbalance still. And so every container continues to matter to be able to get keep your supply chain moving. So those are really the big things that I see that have changed over the last 2.5 years, and it has required you to actively manage the performance of your contract, because if you can't, it's very expensive for your alternatives, or in some cases, you can't keep cargo moving. And that's extremely dangerous for businesses, especially during the really high demand. We're seeing demand drop a little bit in some industries, but I think the pain continues to remain.
And the power still remains a little bit, the seesaw of power, maybe still with the carriers more than it had been in previous years. Interesting observations there. So with that in mind, Jenny, how do you manage your contracted allocation at Bark today?
Yeah, so we did about a 180 approach in our, we took a 180 to our approach and strategy to find stability and security. And in the past 2 years, we transitioned a portion of volume from NBOs to BCO and started carrier direct contracts. We have several through NICHEX, but in all of them, we took a very disciplined and deliberate approach to being as reliable as possible. And so some of those more controllable factors that I mentioned, really tactically, we submit bookings as far in advance as allowed, right? We aim to meet our contract allocation as close to possible as exact, right? We don't want to wildly over allocate. We don't want to have shortfalls. We very purposefully manipulate our volume to where it needs to be. Shipped cargo ready dates. We've changed our purchasing habits, which on the surface may seem like an obvious choice, but as you know, can take many months to actually come to fruition. And so we've taken a pretty relentless approach to ensure we have an extremely strong track record. It is central and critical to the operation on a daily basis. And so with NICHEX tracking all of our contracts, whether through them or our additional ones, the contract and performance data is readily available, and we use it in daily decision making. So regardless of a particular moment in the market or a time of year, the last thing I want as a shipper is any mystery around what is my capacity I have to work with.
Considering the carriers have consolidated into what is essentially 3 big, gigantic space sharing alliances, does that give you enough options, Jenny?
It's that daily Tetris game that we know and love, and so it is certainly nothing's on autopilot. It is a daily maintenance, and we're pretty much a daily maintenance.
Yeah. So Matt, based on this, what have you seen at NICHEX as a best practice across the shippers that you work with?
Yeah, it's a good question. So I'll give you a couple. I'll start with maybe not the best practice, and then I'll talk a little bit about how people are thinking about this more strategically. I think what we've seen over the last 2.5 years is what I'll just call a lot of people power, where there's lots of time and energy and spreadsheets and bookings and rebookings being done to try to get every container you can. Essentially, how do I go out, book against every contract, see who takes it, see who doesn't, and try to keep as much cargo moving as I can. It's a very reactive approach, and quite frankly, the challenge has been there's not a lot of tooling that's been built to do this strategically. I think the better approach that I've seen is shippers have been very strategic with who they want their long-term partners to be. And so they're going out and going through thoughtful, I'm not going to call them procurement exercises. That's what I would have called them prior to the pandemic. But they're really looking at strategic relationships and partnerships, signing up with the carriers that they feel like they can deliver to and that the carriers can deliver to them. And then they are booking and committing to the amount of volume that they want to move with that carrier. So I think the smart ones are not going through the the old days of let me sign up, double my volume and push down price. They're looking for who's going to be my long-term partner. In some cases, I'm signing up for multi-year agreements with these strategic partners. And then I'm able to go and book at my rate. And quite frankly, even as the spot market has started to dissipate, we still see those really smart strategic shippers continuing to book against rates that might be higher because these are now their long-term strategic partners. So they've got a much better foundation of carrier mix, and they're looking to fulfill and honor their contracts, knowing that they'll have the stability into the future. And then, from a tactical perspective, a lot of this stuff still happens in Excel. So it's I think we always use this stat that 70% of supply chain is still run on Excel in a lot of cases. But I think it's the intent at which you manage it that I've seen as a differentiator.
Strategic commitments, honor their contracts. These are words that had no meaning in the past, when a shipper could simply not show up with their stuff as per a contract, when a carrier could simply refuse to take it, roll it to the next voyage, take a ship out of service altogether, blank a sailing. Now you're saying that this is a whole new world. That's really fascinating, Matt, if that is indeed the question. It's good news on both sides, really, that there's some new commitment to a strategy and honoring the whole concept of the contract.
Yeah, last year's TPM's theme of relationships matter. I'm still sticking with that.
Okay, great. With that, why don't we move to the first of several poll questions that we'd like to ask our audience. We really want your feedback, which will help our presentation and give us some insight into what you guys are thinking these days about what's going on and what you're experiencing. This first question is as follows, and I'd like you to choose one of the following four. Which process do you rely on most when managing your contracted allocation today? Select one. 1, we manage it ourselves using spreadsheets. 2, we manage it ourselves using our TMS, transportation management system, or other allocation management solution. 3, our 3PL, our third-party logistics provider, manages it and sends us weekly reports. And 4, we use a carrier or NVOCC, non-vessel operating common carrier platform. I'm going to take a moment here to give you guys time to choose one of those 4. I'll be very interested. I'm sure our speakers will be very interested to see what you folks are doing today on that score. So just a few more seconds while you make your choice, and we'll see what the results are. Oh boy, here we are. Okay, well, 55%, the majority say we manage them ourselves using those evil spreadsheets. 36% is next with our 3PL manages it and send us weekly reports. 9%, we manage it ourselves using our TMS or other allocation management solution. And coming in at 0, interesting, we use a carrier or NVOCC platform. What do you think about that, guys? Matt, what's your observation, first of all, on those results?
Well, I was only off a couple percent on my 70% of supply chain is managed on spreadsheets. So I'm not surprised by that at all. I mean, this is the world that we at NYSHEX live in every day. And so I'm not surprised to see that. Maybe I'm surprised that no one responded that they use a carrier or NVO platform. But spreadsheets are still the predominant tool, or they outsource it, and a 3PL will manage their entire booking process and send them reports. And we see some challenges kind of riddled in that process. But the fact that that's still the spread doesn't surprise me at all.
Jenny, how does this match with what BARC's up to? How do you guys do it?
I mean, we were the biggest spreadsheet, Google Sheet, 30 tabs open at the same time. That was us only a year and a half, 2 years ago. And so now we are using the NYSHEX platform to sort of set that foundation for how we're doing the contract allocations. And so it's streamlined it quite a bit and getting us, we still use spreadsheets. I can't lie. We still write, they're kind of the Band-Aids in a lot of situations, but we're definitely more technologically focused than we have been in years past.
That is really good news. So Jenny, I want to ask you another question just based on what you folks are doing. Does BARC actually have a fluctuating seasonal profile, or do you have flat demand across the year? What's the nature of your product? And if it is fluctuating, how do you communicate this to your carriers?
So we have both, given we have multiple business models, both in the retail partnerships on the subscription business. With our retailers, product is customized and made to order for them. So You're not going to see the same product across different retailers, which is a superpower we're proud of, but it also means the timeliness and reliability of inbound is even more critical. And so in the areas that we are more seasonally impacted, or just in general with forecast changes, which are happening, we look as far out as we can to do that manual manipulation I've talked about and to smooth out volume as much as possible. We really do want to be as consistent and predictable. I would like to be a very boring, steady shipper in this regard. That would be a great compliment.
Good luck with that.
Yeah. But of course, I mean, we are in regular contact and communication with the partners and the carriers. We're sharing routine forecasts. We update them. And so things do happen, right? We've certainly picked up the phone over the past year and had to have conversations about, hey, we have an obstacle. How can we work together? But I think because we've taken such a heavy hand, almost obsessive in managing the allocations, we've had better outcomes when the forecast has fluctuated and we haven't been as steady.
I guess the big question is, do dogs know it's Christmas? You know,
100%. I absolutely believe
I think
it.
I could testify to that. I definitely.
Or every month when they get their bark box, it's Christmas. It happens
That's
12,
right.
12 times a year.
Christmases a year.
Yeah.
Matt, what is your perspective on the whole forecasting process that goes on today between shippers and carriers, to the extent that it does at all in a logical way?
Yeah, it's really hard. I see right now, most of the onus is on the shipper. And so they've got to look at their demand forecasts, and they've got to look at their allocation, and they've got to look at it, as many weeks in advance as they can plan. And then they have to be dynamic, right? So if demand changes, do I, shifts upward, do I have enough allocation? Do I have to go out to the spot market? How do I ensure that my cargo moves? And again, there's a little bit of slack coming into the system, which is making it a little bit easier to move cargo. But if you look even just 3 months ago, the constraints were tremendous. And so I think it's incumbent upon the shipper today to forecast really effectively, which in a changing economy, forecasting demand is extremely difficult. I think we've seen a lot of earnings reports from retailers over the last couple of days that are just showing how hard it is to predict demand in the current environment. And so anyway, it's really incumbent upon the shippers to forecast. And then the carriers really do appreciate when there are changes in demand or changes in forecasts. They are willing to have those conversations. Now, not in all cases can they do something about it, depending upon their network and their equipment places, positions. But there's an absolute desire, from what I see on both sides, to collaborate more. And the challenge is most of this collaboration today, again, happens in emails and phone calls and things like that. It's not in a structured environment. But I think that will change over time, because I do think that coming out of this, both parties want to be more collaborative and work together in order to have mutual success. And that's kind of where I go back to my earlier comment of building those strategic relationships. In a much less transactional world, there's more desire to work together. And so I think we've seen a lot of partnerships really shake out in the last couple of years. And those are now selecting who they want to work with long term.
And by collaboration, a strong aspect of that is the willingness and the ability to share those forecasts, correct?
That's exactly right.
Instead of each having different forecasts and hoarding their own information and not sharing. That's an interesting observation. So Jenny, obviously we are seeing these constant changes in the current environment. Maybe we always will, but I'm just wondering how Bark reacts to that. How do you capture and react to exceptions in the process?
Yeah, so I mean, we are keeping a daily pulse check. And so of our own performance and the carrier performance and willingness to meet and accept the allocations in full. And so when exceptions have come up, we do have performance data readily available. And so using it to problem solve and leverage has been really beneficial for us. So if 5 out of 6 months we've performed extremely well, and on the 6th month we're having a challenge, or we're seeing exceptions, we're not getting the allocation. Having the data to support conversations and requests, right? Our bookings are on time. We show up week after week. You rolled us 2 weeks ago, right? Having that be kind of the meat of your request and your conversation has proved to be really helpful for us, either in getting the allocation needed or getting the forgiveness needed. So it is part of, you can log exceptions within the NYCHEX dashboard. And as you're monitoring contract performance every day, the red flags become really clear. Like you can either, it's helped us really not kind of see behind the curtain. We're not caught out of left field. We're tracking it every day. So you have more insight into issues that you might have to troubleshoot.
Matt, tell me more about that from a NICE's perspective. How do you see other shippers that use your platform managing their exceptions?
Yeah, I mean, I think this is one of the most valuable things that exist right now within the NICE technology. Managing exceptions is the hardest part of today's environment because port omits, blank sailings, all these sorts of things happen without hardly any notice. And so it's very challenging to say, I was supposed to get 20 FEU this week. I only got 8. Whose fault is it? Who did what? Did I get equipment? Did the blank happen? Did they skip Seattle? Those sorts of things are really, really difficult. And so it really becomes a data problem. And so being able to kind of source different data feeds to pull in and show what was the, not just the performance I was supposed to get, but what actually happened and why did it happen? And today, this is the most pain I hear is a lot of shippers that are continuing to work in spreadsheets are just trying to chase down exceptions and figure out why they didn't get what they were supposed to get. And then that puts a lot of strain on relationships. And so being able to have a kind of a shared source of truth that both parties can see the data makes for a much better understanding of what actually happened and how the contract's performed.
Well, be able to take a historical view of it's certainly valuable, but not of much use at the moment. I'm wondering to what degree are shippers and carriers able to maintain a system of alerts that allows them to react at the time when it's important to react when those exceptions crop up?
Yeah, so the challenge is these sorts of exceptions typically happen very late in the process. And so it's typically right before CY close or these sorts of things. And so the goal here is if there is time to adjust and shift allocation, we provide those alerts. But for those that happen last minute, again, blank sailings and port omits are not always announced well in advance, at least being able, to your point, to be able to track and say, this is why this occurred. That even in and of itself is very difficult to do, and allows you to have a conversation of, okay, this occurred. Hey, shipper carrier, maybe we can come to an agreement on, pushing that allocation forward or figuring out how we use that space. So it allows for, I'd say, healthier discussions, and then when there is time, that permits the opportunity to shift.
Great. Okay, audience, we want to hear from you again. Our second big poll question for the presentation is as follows. Which is the biggest challenge you face when using your current strategy? We bring up the poll question so we can read this out. There we go. Thank you very much. All right, so here's 4 choices. The biggest challenge you face when using your current strategy. 1 is data accuracy and version control. Lack of visibility into performance. Strenuous management of time and exceptions, or accessibility to information for all team members. And those of you with ulcers are probably going to say all of the above, but please try to pick one. So we're going to give you a few seconds to trigger the anxiety that you feel from having to deal with these things on a daily basis, and see if we can get you to tell us which of these 4 challenges is number 1 for you at the moment. Okay, let's see what we got here. All right. Well, leading at 31%, lack of visibility into performance. That's probably no surprise. Tied at 25% each, data accuracy and version control, and strenuous management of time and exceptions. And then bringing up the at the end, but still a substantial amount at 19%, is accessibility to information for all team members. So you guys have any observations on this? How does this track with your understanding?
The version control one stuck out because it's so true, especially in a remote hybrid environment. What I see at 9 a.m. is different than what someone sees at their 9 a.m. And so being able to have a central source of truth in a situation that is always dynamic, bookings are always being released, they're constantly being rejected. But it's become such a bigger need because we're not all in the same room together looking at, and then of course the version control issue only gets worse if you're trying to do it on spreadsheets. So that one definitely is top of mind.
Yeah, I was quite surprised to see how evenly spread it was. I look at that and kind of just go, the answer to that question is yes, these are all painful. And my guess is if we'd asked this question a couple of months ago, that exception piece would have been probably like 95%. And I think that's just a little bit of where the market is today. Congestion is, I'll say, slightly improving. The network is slightly improving. And so I think maybe that's a little less painful than it was a couple of months ago. But and the blanking programs are less robust right now. But my takeaway there, Bob, is these are all very, very painful.
Oh, okay, great. So Jenny, I know you work with a third-party logistics or 3PL booking agent to manage your contracts. How does the process work for you?
Yeah, so we have a set of predetermined booking rules we've provided to our partner. So if booking meets X criteria, allocate to this contract. And then there's priority levels within that criteria and among the contracts. And so pretty much matrix based, but it is never something that's kind of like set it and forget it. It is constantly under review and discussion, especially as we do make real-time decisions to push back volume, to pull up cargo, because the purchase orders as written are never going to match the volume that you need to fill. So it's still very much an ongoing part of the daily operation, even though we do have a booking agent placing it for us.
Okay. Matt, how do you see other shippers partnering with 3PLs and booking agents to manage their contracts, and what challenges do you see them as encounter?
Yeah, I think when I look at a lot of the shippers that use 3PLs, they're basically saying, I need this help in all of these different origin countries to place these bookings. And typically there's legal requirements that you be in country to place these bookings. So you need these folks in country. And it also gives them the ability to not have to kind of manage the allocation process, as Jenny said, yourself. You write these rules, you say, book this contract first, this contract second, and this contract third. The challenges that I see is these companies are very good operators. They are focused on, I'll take these set of rules, I'll go book against these rules. If carrier one says no, I go to carrier two, et cetera. The challenge is in the current environment, you don't get a lot of visibility to why did something get rejected. That's my first priority contract. It really matters to me. 2 years ago, again, small differential in rates, maybe small differential in transit time, service. But now, you might have $1,000 plus differences in rates. So contract one might be really important to you. And so I think the challenge has been the lack of visibility into booking performance from some of these third parties. They're not technology companies. They're not built to provide you real-time data into performance. They're there to take your rules and book. And so a lot of these reports end up being in static data and spreadsheets that come maybe once or twice a week that tell you, here's what happened. But at that time, it's almost a little bit too late. So I think this is what the pandemic has uncovered, is that there is a need for technology in this process for ensuring that booking rules and contract management is required. And I think there's my bet here is the industry is going to continue to invest in bringing this part of the supply chain into the future.
Will this mean that carriers will remain agnostic as to whether the booking comes directly from a shipper or through a 3PL or through a freight forwarder or through an NVO? Or is there, at the risk of asking a third rail question here, just wondering what is the situation there and how might this technology put an end to the practice of discrimination or alleged discrimination in that area?
Yeah, I'll try to give you like a 10-second answer so I don't go on for too long. But I don't think it's going to change, right? You've got some 3PLs that are owned by carriers or forwarders and those sorts of things. And again, because there's so many local country requirements, you simply need companies to place the bookings. And so, yes, I hear concerns of am I, treating my carrier bookings preferentially depending upon which carrier I am. I think this becomes more of a transactional thing, and it just becomes like, how well are these companies executing rather than any like misdeeds or stuff like that.
Okay, cool. Well, Jenny, just Matt brought up the issue of technology, and of course, that's what nigh is all about. And I'm wondering your opinion. How is technology playing a role in contract management at BARC? And if that being the case, what are the most critical problems that you need to solve where technology can help?
Yeah, so we really have made leaps and bounds from Excel and spreadsheets being our core operating system. So we've worked with in-house data teams, but really we heavily rely on the NightChecks platform to do the bulk of our rolling forecast and to track the contract allocation. So that in itself is miles away from the never-ending spreadsheet. I think in terms of sort of critical ongoing challenges or areas of opportunities for us, right? Allocation management is that big game of Tetris, both from the volume standpoint, but weighing the business needs and criticality behind different inventory. And so when you have fixed capacity within your contracts, the contracts, as Matt mentioned, have different price points. Some have different features or value adds. Contract 1 might be more priority than contract 2 for insert half a dozen reasons. But you want to be able to make the best decisions from a cost and business needs standpoint when you're allocating inventory. And so I think one area that is really an ongoing area that we continue to explore is how do you have mechanisms to have those kinds of conversations effectively, right? If you juggle different business stakeholders, everyone's inventory is always the most important to them. Like theirs is always priority. And
Sure.
so how can we use technology to better have those conversations of weighing your priority inventory? Okay, here's our capacity. What makes sense to move where? Definitely a really, really big ongoing need.
So Matt, what's the perspective of a technology provider such as yourself, and what are the biggest problems that you think need solving?
Yeah, I'll just mention a couple. When I look at what a shipper needs to be able to do, they're looking at this and saying, here's my demand forecast, what I believe it to be, and then here's essentially my inventory, my capacity that I have with my different carriers. How do I forecast that into the future? And then how do I match up? This is actually the hard part. How do I match up what's been confirmed versus what's still pending? That pending is the black box.
Mhm.
And so being able to say, okay, in this given week, I know I'm going to need 10 containers. I have 8 confirmed, and I have 4 that are still pending. So actually, I should feel pretty good about this week. So it allows you to look into the future and say, should I feel comfortable? Or do I need to say, okay, let me get on the phone or talk to my rep at this carrier to see, like, is this booking going to get confirmed? So it allows you, to your earlier question, Bob, to be proactive in ensuring that space is going to be released for very important cargo that you want to deliver to your customers. So that pending piece is the really, really challenging part, that if you outsource this to a 3PL, you typically don't get great visibility into what's still pending. And you kind of need this in live time to make good decisions, because if you get this data 2 days later, you might have already had to make a decision. So you need this in as real time or near real time as you can get to make decisions for your business, because things are shifting so quickly.
Great. Let's take one more opportunity to poll the audience. This is a final question for you all to answer. And it is as follows. Audience, how much time do you or your team invest in managing this process each week? Less than 5 hours? 5 to 10 hours? 10 to 20 hours? Or more than 20 hours? Let the numbers run through your head for a moment and figure out. I'm not sure how one would even figure this out, considering all the administrative and technological aspects of this process, but let's just get a rough estimate from all of you as to what might be closest to your own reality. So we'll give you just a few more seconds to answer this. See what people have to say. Okay, here we go. All right, leading the pack at 10 to 20 hours, 40% say that. Whew, that's a lot of time. 33% say less than 5. Well, okay. And then 27% 5 to 10. And then fortunately, I guess 0% say more than 20 hours. What is the experiment? Jenny, how does that match with the amount of time that you take on this kind of stuff?
Oh, that's tricky to answer.
Yeah,
I think
I knew it would be.
a lot of it could be volume specific. For us, let's say if we were spending 5-6 hours a day, that's probably been streamlined to 1 or 2 a day. Yeah, which is cut it significantly in the right direction.
Matt,
Yeah, I think it's so business dependent here. Like you might have an exporter that's moving agri that is shifting things around, trying to optimize contracts and margin all the way up until the last second. And so it's, if you get into the booking and the rebooking and the shifting bookings, that's extremely time intensive and manual. You know, maybe what my takeaway here is that a big chunk of this group has built good strategic partnerships, and they're able to place their bookings, they get accepted, they're not having to change. The change is what is taking a lot of the time. And so I'm glad actually to see that there's not a group here that's spending more than 20 hours a week. But I would say even as recent as 6 months ago, I've talked to folks in shipper organizations that say, I've got 3/4 or a full person dedicated simply just to managing this process, right? It's an entire FTE managing this process of booking and rebooking and managing and reallocating. And it's just extremely manual.
We're looking for that AI-driven contract management robot somewhere in the future. I don't know how long it's going to be before that thing shows up. Well, listen, Jenny and Matt, thanks so much for your candid and insightful answers to those questions. I think we learned a lot in the last few minutes on this subject, but at this point, let's pivot over to audience Q&A. I want to hear what the audience wants to know from you. It's a good opportunity to poll your expertise. So let's start with some questions that have already come in. And even as we are answering these, audience members are encouraged to continue to submit your questions by clicking on that Q&A icon at the bottom of your screen, and we'll get to as many of these as we possibly can, time permitting. So what I'm going to do is I'm just going to throw these out and see who can answer. Maybe each of you can take this from a standpoint of Jenny as an individual company, and Matt from your broader view of the industry and your all of your customers. Let's start with this one, and it's a good one. How do you forecast with confidence in today's market? Is it even possible? Jenny, why don't you start with that? See what.
Yeah, well, it's certainly dynamic, to put it mildly. I think, right, forecasts are changing. I think every company is dealing with that. Because we focused really on building these partnerships over the past year and on performance, I think we've gotten to a place where if we are having shortfalls, we can have educated conversations, right? Instead of looking at a monthly reconciliation basis, can we do this quarterly, right? Can we look at this 6 months of our performance versus just next week's sailing? And I think having, as we've talked about, the importance of those relationships a few times, because things are changing. They're not as steady as they were 3-4 years ago, and they're not going to be that steady again in the next year. So we do have a lot of transparent conversations, and we do very aggressively forecast, reforecast, share those forecasts again with NICHICS, again with the carriers on a pretty much weekly basis.
So it's almost at an execution level, because I was going to ask
Yeah.
what your plan is when forecasts fall short. And I guess that's what you do, right? I mean, on a
Yep.
very short-term basis, you're able to react and respond and communicate with the carriers in that way.
Yeah.
Good. Okay. Matt, what do you think? How does one forecast with confidence in today's market?
Yeah, I'm actually gonna skip on that one, and I'm gonna take the second part of that question. You know, I'm not sitting here forecasting a business. I talk to a lot of shippers, and shippers are having tremendous challenges with this because you've got you've got interest rates rising, you've got, you know, I guess you've got inflation out there, you've got lots of pressure on the customer, so it's very difficult to forecast consumer demand right now. And so I think what I'm seeing in some cases is the second part of this question, which is when your forecast falls short of what you expected, how do you go and have those conversations with carriers? And I think what it forces you to do, I don't want to sound like a broken record, but you're forced to kind of prioritize your relationships. And I think the more open and honest and transparent you can be with your carriers, the better you're going to be in the long term. I think trying to get you know, too tricky here and trying to allocate a little bit here, a little bit there, and trying to make everybody happy is going to be quite risky in the long term. And so you've just got to figure out, in some cases, like where are your most important contracts, who are your most strategic partners, have those conversations open and honestly, you know, because I think we're starting to see some mistrust creep back in as the spot market starts to kind of fall right to the level of contracted rates or slightly below. And I think there's a lot of worry on the carrier side of our shippers kind of starting to go back to old behavior of, well, now the rates are advantageous to me. So is my demand actually dropping, or am I just going out to the spot market? And I think that's a very dangerous place to live.
Great. This audience question says, how do you see the market trending for OOG cargo? I assume we're talking about out of gauge. We're already limited extremely on the number of containers and vessels. Would you have any insight on how to utilize our precious allocation? The questioner says, I'm spending 20-ish hours a week in Excel tracking bookings, containers and ports, etc. I went from more of an escalation point to a data tracker for allocation now. There's a lot to unpack in that question. I'm wondering who would like, maybe Matt, you want to start with that one just from a broader viewpoint?
Yeah, so on the out of gauge equipment, the open tops and those sorts of things, it's tricky. There's not a perfect science. I wish I had the answer to this person's question. I think this really comes down to like, how do you work with your carrier in this sort of equipment? Because this is less about, in my mind, the ability to kind of forecast and work on allocation, and it becomes more of an equipment issue. And I think when you're dealing with specialized equipment like out of gauge, it requires really good syncs with your carrier partners to understand what your forecasts are, where that equipment needs to be. We are working with some carriers on creating tooling that actually would connect carrier and shipper forecasts together for these sorts of scenarios. But I think with specialized equipment, you're gonna need to stay very close on that forecast because it's so equipment driven.
Okay, Jenny, I don't know, imagine this would be an issue for Bart.
No, I mean, I think also Matt pretty well spoke to it.
Yeah, I figured, okay. All right, here's another question. If planning and forecasting have become difficult and inventory is increasing and cost of money continues to increase, which of course it is, do you have a plan to mitigate import duties and cash flow? Could an FTZ, that is a foreign trade zone, be a solution? What do you think, Jenny? Is this fall into your category of relevance or not?
Yeah, I mean, it's certainly an open topic of discussion. I think our business model can be a bit unique in that everything is custom made, and so essentially everything is seasonal. So every box is new, every theme is new, every retail partnership is new, and so us stopping inbound goods or having any kind of pause is really not something we would look to do because it goes against sort of our core operating principles. So it's not something we're exploring heavily, given we're really more focused on keeping that reliable, steady inbound flow of goods is really our top guiding priority.
Makes sense. And I'm going to congratulate you for avoiding the pun on the word pause. Thank you very much for not bringing that up.
Oh, don't worry. It was top of mind. Don't worry.
Okay. This questioner says, do you have carriers of choice or NVOs of choice? Which is an interesting question because so much of the discussion lately has been the shipper of choice, with the carrier in the, having so much power these days and can pick and choose. They can select who they like based on how they're treated by the customer. But this is flipping the question. Do you prioritize certain partnerships over others? Let me ask you, Jenny, and then maybe Matt get another perspective.
So I think and you use the same phrase, like we have been focused on becoming a shipper of choice so that we would have more control over the situation and sort of be a bit carrier agnostic. We have built really strong partnerships with various carriers. But I think our focus just from the Bark standpoint was more also as we were relatively new to these contracts was coming out of the gate, being as strong as possible so that in the next 3-4 years, it is more of, we can be a bit more of a shopping perspective than just kind of, right, we had to prove ourselves. So that's a bit of a blended answer. Our focus has really been being that shipper of choice. We've had relationships that have really gone well over the past few years. And so those will, of course, continue to be the priority.
What do you think, Matt? Do you think that shippers are in a position to be usually thinking about carriers of choice or NVOs of choice?
Yeah, so it's interesting, and we won't put the pressure on Jenny, given she has to tell all of her partners they're all strategic.
You're all my favorites.
Right? So I get to be a little bit more neutral in that I don't actually move inventory or cargo around the world. But yeah, I mean, it's an interesting question. And I would say over the last couple of months, we've started to see this question come up for shippers where demand has started to drop significantly. So it's not every shipper, it's not every industry, but there are pockets out there where their customer demand has started to drop. And so it's forcing this question of, who do I prioritize? And so I think, again, it goes back to who are the strategic relationships versus who are the transactional relationships. And then I think I've also seen it come back to contract type. Some contracts are longer. You're probably going to prioritize those longer term contracts. Some have penalties in them. If you don't fulfill, you're going to be on the hook for a penalty to that carrier or NVOCC. And so I think most shippers take a look at their contracts and they have a priority. And even when we talked about 3PLs, inherently there is a booking priority. But I think the overall view is which contracts must I fulfill first and who do I want to be my long-term partner? And if I have to let somebody go because my inventory or my demand has really dropped, who can I live without? And I think in my mind, that's a smarter way to think about it than trying to sprinkle a little bit everywhere and kind of nobody's happy. And so you're really forced to choose who you really want to be in business with for the long term.
This question kind of bounces off of what we talked about earlier about the role of 3PLs or third-party logistics providers. And the question is, do you feel confident when working with 3PLs that they will fulfill their duties and operate in your best interests? Jenny?
Yeah, I think as if you've established those predetermined rules, right, and yes, of course, right, there would be, I think we've had a high success rate with it. However, you're always going to know your business better than any 3PL, right? That's just inherent. Things are going to come up every hour that impact the priority of different inventory levels. And so I think your 3Ps can operate with your best interest based on instructions you've given them. But you're still, right, it's your cargo. You're going to know the most important context behind it. And you are also the one on the line with these relationships, right? So I think that we've had a wonderful relationship with ours, but still no one knows my cargo like I do.
Yeah. Okay. Well, we are just about out of time, but we do have time for one final question. And here it is. How do you see the need for managing contracts changing as supply and demand rebalance in the market? Jenny, why don't I start with you on that one, and then we'll get Matt's perspective as well.
Yeah, so I don't see the importance of managing your allocations very aggressively, having tools and data to do so. I don't see those decreasing in importance. Knowing / assuming, right, we're still not in a place where you can predict with absolute certainty how things will pan out, nor can you still take anything for granted. Right? Shippers are still going to need to ensure they have capacity on their needed lanes, on the needed timeframes. And so I think also from a partnership perspective, trying to avoid being reactionary to the headline today or the market today, and really continuing with the long-term partnerships because you don't know what's around the corner. And so I think the need doesn't change to try and identify what are your most important factors: reliability, speed, cost, all of the above. But have those factors shape how you're managing your contracts and have a plan, like be deliberate, be proactive. And there's tools and resources that can help if you're struggling with that.
Matt, what is your idea on this?
I love this question, and I have a pretty strong opinion on it. When I just think about the supply and demand aspect of it, my perspective is 2019 and before is done. I mean, just quite simply, like, we're not going back to $1,200 spot rates to the West Coast and lots of excess capacity. And my perspective is I think the carriers have gotten really good, and sometimes this feels painful, but very good at managing their networks, managing capacity based upon demand, right? And if I was an asset owner, I would probably want to utilize my asset well. And so if you believe that supply and demand will continue to be quite close, then managing these contracts is extremely important. You need them to perform. You need your supply chain to be reliable. And to some of the questions earlier, you want to be able to prioritize the fulfillment of those contracts, either because it's a rate, because it's a service level, a transit time. And so I think this becomes even more important into the future, even though some of the pain, the congestion may subside over time. The exercise of accurately and efficiently managing the contract performance, I don't think that goes away at all. I think it continues to be important into the future.
Yeah, I would imagine so. It's gratifying to hear the two of you talk about this technology and this change in attitude to the point where maybe we'll see an end to the seesawing power struggle between shippers and carriers in the trades. Maybe we'll see true communication, true strategic commitment going forward, thanks in part to the technology that NYSHEX is offering us, and same thanks in part to a new attitude such as shippers like Jenny are talking about. So I want to thank both of you so much. Thank you so much, Jenny Bartol of BARC and Matt Marshall of NYSHEX for these great observations and great answers to these questions. Here is some information on how you can visit www.nyshex.com to learn more about the company's latest allocation management tool that will achieve some of the goals we've been talking about over the last hour. So take a look at that. And thanks again, audience members, for your participation, for your great questions, for joining the webinar. And thanks again, Jenny and Matt, for your excellent presentation. Everybody, have a great day.